What's up, freeloaders? Welcome to the next core content video. Um, I didn't have a plan to make this one, but I'm okay with putting it on the playlist because I've had multiple people ask me for direction on things like this. Um, so I'm gonna attempt to make this video not very long because it's about backtesting. This is not going to be a backtesting session. This is basically giving you a guide on how you how I would suggest people to be using their time on backtesting. So first things first, I highly recommend using a software like FX Replay. If not FX Replay, then something that can do exactly what FX Replay does. Um, if you are backtesting with what is it called? Um, if you're backtesting with uh, like TradingView, where you're just doing bar replay, that is absolutely not enough. It's not intentional enough. It's not extensive enough. You don't have as much control, and yeah, it's just there needs to be more intention, and there needs to be more data and longer periods of time with more detail and things like that. You can now on FX Replay go to the 5 second chart back years and years and years, which is crazy. And you guys absolutely need access to that. If you're going to be trading the 5 second, you need to be looking at the 5 second. I know that that guy Dave likes to tell people what they want to hear so that they buy into his stuff, but uh, fractality in price is really really misconstrued, especially by that community. The 5 second does not look like the 1 minute. The 1 minute does not look like the 15. The 15 does not look like the 2 hour. They have their own rhythm, their own pattern, their own way of breathing and moving to them. Though the same concepts of structure still occur on each of them, their behavior is significantly different, and it would show that you're an inexperienced trader if you can't see the difference between candles. Um, Not necessarily saying that you need to be able to, that I need to be able to hold up a flashcard to you and be like, what time frame is this? And it's just some candles, right? That's not exactly what I'm saying, but I'm saying the entire flow and behavior, unique identity of each time frame is going to be a little bit different, and you have to study years of data worth of each time frame, in my opinion. So first things first, quit making the excuse about getting FX Replay. Some of you were in my premium mentorship before or some of you were in Safe Place, and I think I was like charging $60 to $100 a month depending on when you joined. Some of you were in the Magma mindset, and I was charging $100 to $240 a month. So I know that you guys are blowing money on evals, and especially blowing money on funding fees like all the time. And you can absolutely afford to buy, just stop buying evals, which you shouldn't be buying anyways, and to be putting some money into backtesting software like this. It's not perfect. It's got a lot of kinks and things like that I don't like. But it is, in my opinion, the best option right now. And for unlimited access to the 5 second chart as far back as however many years back you want to go, that's incredible for 35 a month. The kind of data and learning you can do on that is crucial. So FX Replay is very important. TradingView. If you're a TradingView backtester and you come into my free Discord and you're sending pictures of like live price action in the backtesting section, or pictures of like yesterday, and you're on bar replay on TradingView, I'm not going to answer your question. I'm not going to take you seriously. And if you keep bothering me, I'm just going to kick you out because you don't take yourself seriously. You need to be able to go back. For instance, I've studied back from 2012 um, all the way through basically present day almost a couple times at least. Um, and then other, many sessions of the last 4 or 5 years. I've done those even more times than you can count. So I'm very familiar with price on the higher time frame, and in a lot of instances, I'm also very familiar with the things that constantly get repeated on the lower time frame. And that's part of my experience and why I'm able to read price the way that I am. So that's step one, getting a backtesting software that is designated for backtesting that you can use a journal if you want. There's calendar information. There's go to next day open. You're really simulating long-term sessions in the market, and you can just say, hey, price action isn't what I am wanting to study right now, so I'm going to go ahead and skip a few days and go to something, go where I do see us break out of this range, and then I want to continue to study trends, or hey, I want to find ranges and I want to study those. Things like that are very important. So again, step one, get off of TradingView, bar replay, and get on FX replay or something similar. Now, step two is to understand the dynamic between running drills, running scrimmages, and running practice games and running real games, right? So a drill, if you are using, I'm trying to think of like a more universal sport. A lot of people that I talk to, they say that they played soccer. Some people played basketball. So let's just not use a sport, but I don't know enough drills about soccer. I'm just going to use basketball as an example, and you can apply it to your sport. Okay, so in basketball, you've got you got practice, and you have games, right? Now there are in the game section, or sorry, in practice, right? There are going to be drills. There are going to be so one sec. All right, I'm back. So there are going to be drills. There are going to be scrimmages, and there are going to be plays, right? So you're practicing drills. That means you're working on your specific skills, like shooting drills, dribbling drills, passing drills. These are to work on your muscle memory, your technique with your execution, right? And then in scrimmages, that's when the starting five go against the not starting five, and or how whatever it is in soccer or football, right? You're scrimmaging against your own team, so you guys aren't trying to necessarily hurt each other or anything like that. There's no risk of losing something or nerves. It's really just your team going against your team to try to get better. You going against you to try to get better. And then plays. Those are hey, we're running one, we're running two, we're running play three, right? Whatever it is, we're running Texas, Dallas, like all the code names that people will use. Um, and those drills are that practice type is for basically making sure that you know how to, or like where you're supposed to be on the court during those plays or on the field during those plays specifically, and what your role is, and just getting good at having the repetition of playing that role properly. Now in games, you've got preseason games, you've got um, regular season, and you have then also playoffs and everything up beyond that. But we can really just break these into preseason and regular season, honestly, because playoffs, I don't really have much of an analogy for that unless I think of one. So pretty much in practice, we've got drills, we've got scrimmages, and we've got plays. Now I'm going to kind of give you examples of how to apply this, and this video is about practice, right? So how do you apply this in your backtesting. So in drills, you are drawing candlestick structure. You are drawing market structure. You are drawing Mark IIs. You are drawing flips. And this is part of market structure. So that would be flips, swings, and you are drawing invisible market structure. This thing is annoying. Invisible market structure. So FFZs. You are drawing low tap backs, high tap backs, NSLs, NSHs, so non-structural lows, non-structural highs. You're drawing all of these things, and when you're working on a drill, sometimes there are combination drills. Like in basketball, I know that they have like dribble and pass drills, right, or dribble and shoot drills. Typically, one of the things is the main focus. So if they want to improve your dribbling, they're going to make you dribble, pass the ball, dribble, pass the ball, right? To reset, get into the rhythm, reset, get into the rhythm. And with shooting drills, it can be the same thing. Maybe you have to catch the ball in a pass versus dribble up to your spot to shoot. But all in all, you are working these drills to improve your technique, right? And you're going to be working on each skill one at a time. So drawing candlestick structure is like working on your dribbling, or market structure is like working on your footwork, and drawing Mark IIs are like working on your passing, and et cetera, right? So you've got a bunch of things to work on. You've got to work on your dribbling, your shooting, your passing, your game IQ, your endurance, right? Your running and exercising to improve your fitness and your speed and things like that. So when practicing in backtesting, you should be practicing in that way where you can sit down and log literally hours and days or weeks, months, and preferably even years, depending on your time frame, of just drawing candlestick structure. That's it. Just drawing candlestick structure, disregarding market structure, and then drawing market structure, right? Disregarding everything else. We're not looking for invisible market structure like fake flip zones. We're not looking for Mark IIs. We're not looking for any other stuff over on the right side of this list, right? We're just looking for, maybe a little candlestick structure to confirm our market structure, and market structure swings, right? We're drawing swings, we're drawing flips, we're drawing swings, we're drawing flips. And you're doing that for days, weeks on end in real time, and you're studying months and years of data doing that, right? You're not trying to take a trade and figure out, because that's what scrimmages are for, right? So your whole point in drills is literally just to rep that out. Whenever I was in basketball practice in high school, and I would, they would have, the 15, 20 minutes of just doing drills. We weren't running any scrimmages. Like if we tried to, fuck around and play one-on-one just to, mess with each other, when we were supposed to run drills, our coach would make us run laps, right? Make us run lines, because we weren't supposed to be doing that. We were supposed to be focusing on our drills. So do not be utilizing that buy sell button. Do not be utilizing the short long tool at all. Okay. Just focus on one of these things at a time. Candlestick structure, market structure, invisible market structure. Start to draw just fake flip zones for a couple, for a week or two. Just study that, right? If you don't have the bandwidth to put in a week or two on each of these things, you should quit trading and do something else, 100%. So scrimmages. Now the next part is well, actually no, sorry, I have this in the wrong order. So we're going to talk about plays. So plays is typically what I would suggest comes next, and plays are pretty much your entry models. So you are studying, and how about position management? So in studying your plays, in that metaphor, you're studying your entry models and your position management. So let's say that we're, practicing an inbound play. Ball is out of bounds, and one of us is going to pass it, and the other four of us are going to run a play to get open and try to score, right? So the play is designed that, this guy moves here, and this guy moves here, and this guy runs like this, and this guy runs around him, and then boom, gets the ball, and then the other three run this way. The guy who inbounded the ball comes down, and there's a whole play that goes on. So in entry models, right, there is an order of operations, or sorry, just in case you didn't understand that, there is an order of operations. I need to make sure I'm speaking clearly. So if there's an order of operations in your plays, then you need to make sure that you have them in the correct order and that you know where everything is supposed to be. So if your entry models, or if one of them happens to require a sweep of a specific liquidity level, like the Mark II or any of these four, or the certain levels inside of a fake flip zone or inside of a flip or a swing or whatever it is, right? Um, then and then after that, so first you need that, then you need some sort of strong reaction, then you need some sort of lower frame flip, and then you need on this time frame some inversion of a fair value gap or something like that. You need to see that entry model a thousand times, like more than 1,000 times. I don't even know how many times. I really need to get numbers on this stuff, but you need to see it more than 1,000 times. You need to basically use your short and long tool, right, to be practicing that and saying, okay, this is my model, and this is exactly at this point is where I would get in, right? And then from there, you are literally just doing that. You're just using your short and long tool. You're not using the buy or the sell button, right? You're not trying to, beat off to your P&L on your FX replay at that moment, right? You are just specifically practicing entry models, and then theorizing on position management, learning about how to refine your position management. So if I get into a trade here, at what, and I see this wick, and I see it coming back up, and I get in, and I want to target this high up here. How am I managing that position? Where is my stop loss? You can use the line tool, right? Where am I moving my stop loss to? Am I moving it to here first? Am I moving it, under anything like this? Do I like that? Do I want to go to, like a hourly time frame and look for maybe some, like IFVG, and then use that instead? Like maybe I don't want to see price come and, close underneath this again. And so I, put my stop. I don't know, like whatever your model is. That's not my model, but whatever your model is, right? You're practicing drawing those lines out and learning about that and getting repetition down as to, like, this is the protocol. This is where I typically am going to be looking to move. Like for me, I always like to trail either two stops behind or two swings behind, or put my stops below new fake flip zones. So if I'm in way down here, right, and I've got a trade that's up a couple 100 points, and I get let's say the trade was taken from the 1 minute time frame, and then we've got swings and swings, and then we flip down, and then we flip up, right? My stop loss, boom, instantly is not instantly. I shouldn't say that, but 9 times out of 10, my stop loss is going to move to under there, right? Now there are some there's some occasions where it doesn't, right? But typically that's my protocol, right? So I know how my entry models look. I know how I manage my positions. So when I get into a trade, I'm not, looking for that after the fact. I'm not like, okay, what do I do exactly? How am I going to handle this position? I know what I'm doing. I know what my plan is. I don't know if the market is going to provide those opportunities. So my stop loss might just stay at break even the whole freaking time, or at the bottom of where my original stop loss was. But typically that's not the case. Now for scrimmages are important, right? But they're not insanely important. But they are going to play a key factor. What I'm trying to say is they are important, but they're not any more important than these other two things. Everything, in my opinion, these are all weighted equally. You have to do drills, you have to do plays, you have to do scrimmages, right? So what is a scrimmage in this metaphor? A scrimmage is actual back testing execution. And how I personally recommend that you would do this is that you would sit down with intentional sessions every time and count how many trades that you take, and have a number or a goal that you're getting to, right? So if you don't do that, what'll happen, and you can try this for yourself and come back and say, wow, Magma, you were right, I am a lazy piece of shit. And I'm not saying you're a lazy piece of shit, because this happens to everybody, but you get burned out really easily on backtesting because one of two things. One, if you are screwing up and it's not going how it was, it's not going as well as it was in the plays or the drills, right? And you're getting frustrated, then you're going to want to step away and forget about it and dissociate from it. And then on the flip side, if you have a few wins in a row, you might be satisfied, or you might get this tick in your head, like how you do on your prop firm and when your little drug addiction with your prop firms, right? And you might lose a couple trades, and then you might double your contracts on FX replay and hit some trade, and then take profit, and then let the runner go for 1,000 points, and switch to the 1 hour time frame and hold down the space bar and speed up and be like, yeah, look, like I know how to do this. I made $1 billion in this one trade. Like, first of all, you need to be trading micros on your back testing, because you need to be trading micros because you need to be on a live account, and none of you watching this have enough money to fund a live account with fucking minis. Okay, not financial advice. And secondly, that's not going to grow you, and you just wasted however much time you spent on FX replay. You spent 30 minutes, an hour, 2 hours, whatever it was. If you're just sitting there like, trying to take executions, and that's all you ever do on FX replay, you're wasting your freaking time. So what I would say is get a journal. I have individual journals for each of my sessions usually that I do on the Notes app. I have a Mac, right? And I have an iPhone, so they connect with each other, but you can use other things if you'd like. And I take a picture of my trades, I explain my trades, and I count them, right? So I'll title the journal like 20 trades, 15 trades, 10 trades, 5 trades, 100 trades, right? 50 trades, whatever it is. And then over the course of, maybe if I do 100 trade journal, I'm saying, okay, I'm going to sit down and make sure that this week I knock that out, or in 2 weeks I knock that out, right? And I'm practicing quality over quantity when it comes to executions, because in scrimmages, in drills, right? In drills, it's okay to work the kinks out. You're just drawing shit. You're just going, okay? In plays, oh my God, I forgot. Film. Hang on. Film. We'll do that in a second. In plays, you are practicing those entry models and just looking at them, drawing them out, drawing the confirmations with the lines, with the boxes, with the drawing your entries with the short and long tool, things like that, right? And you're being honest with yourself. And then with scrimmages, we're doing actual backtesting execution, like I said, right? But you're going to draw, let's say, you sit down, you should do like maybe 10 to 20 trades in a session if you can focus for that long, I think. It'd be a great opportunity for people to say, okay, I'm going to take 10 quality trades, because that helps you focus on just, really limiting yourself on, or making yourself pickier on your performance, right? So you're not just pressing the button because you feel like it. You're not saying like, oh, it's just FX replay, so I'll just trade everything and then whatever sticks, right? You're actually trying to simulate scrimmages. We have time to screw around in drills. We have time to fail and be corrected by our coaches in plays. But in scrimmages, right, the coach does not want to see you fucking around. The coach doesn't want to see you poking fun at each other or taking stupid shots that you wouldn't take in a game, shooting from 40 feet, right? Pulling up a half court, or trying to, jump up and dunk it on 3 people. It's like, dude, this is a scrimmage. What are you doing? Right? So none of those things they don't belong in scrimmages, right? That kind of behavior really doesn't necessarily belong anywhere besides maybe like pickup, but there is no pickup metaphor in my opinion on this. Prop firms are pickup, honestly. So yeah. But then we've got film, and this, I can't believe I forgot it, but film is pretty much just watching price action. So film would be you are watching film on another team, or you could potentially be, reviewing your own film. That might fall under games a little bit more, like reviewing your own trades, journaling, or whatever. But film, you are watching price action. And what that looks like for me, when I'm into film mode, right? I'll just throw that 1 minute or something on there, and I'll throw it on max speed, and I'll play it. Right now, this used to be a lot more important to me. I would say that this makes up a smaller component than the other three, but this is also important regardless. You can have a specific session, you can have many sessions open at the same time on FX Replay. I would highly suggest just having a session that goes all the way back for like a couple decades if you can, and just playing it out on the 1 minute, the 15 minute, the 2 hour, or whatever your timeframes that you typically refer to are, and actually actively sitting and paying attention to this. And then sometimes if you get up and walk away, go get some food, whatever it is, right? That's okay, but you might miss something important. So you might be more inclined to just say, hey, I'm going to pause this. Okay. I'm going to go do what I need to do. And then I'm going to come back and look at this. And if you spend significant amounts of time watching, you will start to kind of understand things that you never did before about, what to look for in the market, right? We make this big manipulation up, and then what happens that sends us, from this manipulation up, and then we go down, and then we come up. Why didn't we go and liquidate this, right? Why didn't we go higher up here yet versus what are we doing down here? And you can recognize patterns in that, okay? And you don't form models based on that because it's not consistent, but you do form biases easier when you have experience with watching price action. So when I'm watching film on my opponent in practice, right, in practice sessions with my team, I'm looking and seeing, and your team is just yourself in this scenario, really. I'm looking and seeing like how do they play? What are their plays? And then further preparing myself for the games to come. Right now, games preseason is paper, regular season is money, really. And then playoffs are like when you grow your account and you become a pro, I guess, and you're using like minis instead of micros down the road or whatever. I don't know, but preseason and regular season, that's my analogy there for actual trading. Uh, forward testing slash paper trading is preseason. Regular season is with risk on the table, real money on the table. And then if you want to play pickup and just waste your fucking time and risk getting injured, you can do prop firms. So that's pretty much it. And then let me go through some kind of like visualizing examples real quick of what this may look like for each of these. Well, not for each of these. This is going to be a lot, and I want to keep this video short. Let me just kind of give you the rundown because I showed you what watching PA looks like. That's pretty obvious. So I want to just give you kind of examples on drills specifically because this is going to be, in my opinion, one of the most important things because you need to work on your technique as a trader, and then you need to work on your models, and then you need to work on putting it all together, and then you need to work on how you can put it all together and find holes in your opponent's gameplay, which is watching price action, right? So for instance, if I'm just practicing the drill of candlestick structure, I am just looking and seeing highs and drawing out the top and the bottom of the candle, and using those confirmations, right? And then I'm drawing out the top and the bottom of this low candle. Now these are not structural. This is just candlestick structure, but this is an example, right? You're just looking and seeing like where am I going to be drawing these. So once we get a closure above this, then we can potentially look for a closure underneath a bullish body candle. And it looks like we get it here. So we go ahead and draw this out, but because these wicks occurred before the closure underneath this candle, we go ahead and cover the wick with the high right there, right? And then vice versa, we're looking for the lows and the highs and lows and the highs, and every single little one, master that. You need to do it fucking thousands of times. I'm not even exaggerating. You need to do it thousands of times. Then with market structure, right? We're going to be using our bars to make confirmations like this, right? And drawing our swings. If you'd like, you can use then your boxes. I also recommend using path tools. I really like using the path tool for things like this. It helps me sort of get a bigger picture, sometimes I will take the path tool after I'm done drawing a bunch of structure. I'll take it and I'll move it off to the side and I'll see what it looks like. And it's very interesting to me to be able to study what these things look like after the fact, because price action can look so dirty and strange to us, but in reality it's not that complicated when you just scoot it over to the side and you start to understand it from that perspective. So right here I'm drawing some quick market structure, and now I can just drag it here and say, okay, what happened here? Let me study each of these little things in here, and I can expand it and say, okay, so let me get rid of price and let me look at objectively what's going on. Looks like we have a swing here, so we got a reaction there. Looks like we have a swing here, so we had a low tap back there. Looks like we had a swing here, so we had another reaction there and utilization, and then we had a swing here, and looks like that one got flipped down. And then once it got flipped down, we had a little reaction, probably maybe from an SNDR in here, and then we formed another swing, most likely a low tap back or high tap back situation in here, or an SNDR, and then we have another swing, and we can see that it looks like we hit the 50% right here, and then had a reaction a little bit lower, and then after that reaction a little bit lower, it didn't go much lower, and then had an abrupt pullback, so we ended up having a structural flip, and after that structural flip, it came below the 50 and flipped up again. We had another swing right here where we did an even deeper dig, and then had a rubber band where from we went very low into this swing, and after we went very low into this swing, we had and we actually broke up above this and made a new swing. We then had an expansion all the way above this and had a nice big, and then you can say, okay, and this is a fake flip zone, right? And then you're looking and saying, oh well, now let's look back at this. Now that's a fake flip zone. So let's see, how did price behave because this was a fake flip zone? Draw your whole thing out, and then look, wow, okay, now we had a 50% tap of the fake flip zone, a double tap on it, and then boom, we expand all the way up here. Okay, so there's no more mysteries to market structure, obviously, because I'm unveiling the mysteries of market structure. But you have to do the work of exactly what I'm showing you, which is to just draw a market structure and study it like that and understand what's going on. That you don't have to change your bias or your understanding of market structure based on what occurs, right? And this is a very important thing in backtesting. You're going to want to always constantly try to refine, and don't do that. It's okay to have things that aren't in your scope. It's okay to have things that fail sometimes with a trade, right? Like if your understanding of market structure is limited to just when a trade holds or not. I said this one time in another video. There was a guy, Christoph, in my group, and he was trying to tell me that what I was saying was a structural flip was not a structural flip, and I said, well, it objectively is. And he's like, well, yeah, but look, it went right back up, and if you study, if you back test it enough, it's not a flip. I said, well, if you back test enough, it is a flip, and then it flipped down, it flipped up, and then it flipped back down, and in doing that, it created a much bigger pendulum swing for us to have a sell-off, right, back into that range. And on the higher time frame, you have to have the lower time frame make structural fake flips and stuff like that for the higher time frame to go into effect, right? So don't see market structure and be like, well, this was supposed to be protected and then it got flipped over, so I really can't trust swings. Like, shut the fuck up, bro. The swing isn't there to tell you whether the price is going one direction or not. That's going to be from your experience and from your bias and your all of your knowledge, right? That has nothing to do with like whether it's structure or not. Whether it respects your idea does not validate whether it's structure or not. Okay. So market structure Mark IIs, we're just drawing out a bunch of Mark IIs after that, like looking for where was our flip zone? It was this guy down here. So after our flip zone, we ended up having I think it was a closure above this, right? Yeah. So we tap in lower here and then go out, and then it looks like this Mark II doesn't, the established Mark II doesn't form until, I don't even know on this example. There's not a good clean Mark II example that actually gives a trade as of right now in this, but maybe over here there's one. You could say, okay, look, I've got my Mark II. Now, does this Mark II give a trade? No. Is that okay? Yes, it's fine. It doesn't have to give a trade every time, because just because a POI exists doesn't mean it's going to give you a trade. It's only going to give you a trade when it makes sense for the market to do so. You have to have numerous confluences combined together. So again, don't be looking through these drills and thinking, man, this doesn't work. Like if your coach is telling you to, get your feet set under you and shoot the ball, and you're like, well, in a game I do much better if I was just shooting on the move. It's like, yeah, that's the fucking point. You think that, we've got to fix it, right? So you got to rep having proper form in drills so that then you don't compromise your form, right, in the game. Okay. Invisible market structure, like I said, just drawing fake flip zones, low tap back, high tap back, all kinds of stuff in there. Just, you guys have to watch the videos and know what that is and go practice them one at a time, over and over and over again, thousands of reps on each. And then when you do your scrimmages, be very intentional with your scrimmaging, right? Just try to simulate the real game, but understand that there's not real pressure on you, okay? So you can still make mistakes and you can learn from them, but you do need to be slowing down and learning from them. If you find yourself starting to say, oh, let me just speed up and whatever, don't do that. Say, hey, I'm going to try to simulate 2 weeks of backtesting, and I'm going to 2 weeks of trading in this backtest session, and I'm going to try to take as many trades as I can that or follow my model in those 2 weeks. Or I'm going to trade and I'm going to backtest until I get 10 executions of my model and stuff like that, and then just work from there, right? Yeah, that's pretty much it. You can also do a little practice of position management on your scrimmages as well, obviously. Moving your stop loss into profit, and things like that going to be very helpful for you as well. So if anyone has questions, obviously the link to the free Discord is in the bio. You can come and ask questions. If you are asking me questions that are answered in the short playlist videos that I've provided for you guys compared to other people's playlists, I'm just going to tell you to watch them. I'm not running a paid mentorship currently, and if you guys want help, the help is going to be, the questions you ask that I answer are going to be questions that are that don't have answers already out there, right? So if you come up with a system of how you're going to be backtesting and come up with a number of drills and a number of repetitions that you want to get in, right? And you say, hey, Magma, can you look at this plan? I'll look at your plan, sure. I'll be like, hey, yeah, you maybe also add in some more reps on the Mark IIs or something like that, okay? Great stuff. But if you come in there and you're like, hey, Magma, is this a low? Go watch the fucking video, please. And if you later after, make sure, by the way, that you guys are advancing to the advanced candlestick structure, market structure, and invisible market structure as well, because I noticed that there's less views on those videos, and they are just as important as candlestick structure and market structure. You need the advanced one, and you need the video for the Mark IIs. You need the video for the invisible market structure. Very important. Because there's a lot of stuff that you guys don't understand. Like, you'll be drawing market structure and you're like, hey, Magma, is this correct? And I'm like, yeah, technically, if you've only watched the first 2 fucking videos, but if you look, there's a gap under this candle, and so the closure under it we don't consider as a valid pullback and stuff like that, right? You've got to also do your research and go a little bit further and study all the material before you start trying to progress. Okay. All right, that's it. Hopefully you guys learned something. I hope to see a lot of you posting your backtesting sessions in the group. So to answer the other question that I know is on your mind, if you do come into the Discord and you send pictures of your market structure, I will give it a thumbs up or a thumbs down, or I'll tell you yes or no, or correct or incorrect. I'm not gonna teach you and take you into a one-on-one and coach you on how for free, or type out a thing or send you pictures and stuff, right? I'm not going to spend all my time doing that, but I will tell you yes or no. That way you at least can know, hey, I'm headed in the right or the wrong direction, and then I'll let you refine it. You can send it to me like, multiple times in the backtesting channel until you finally get it right, but I'm not going to answer it for you. You're going to have to do the work of figuring out how to get it right, and then when you do, I will tell you and I'll congratulate you. Okay? All right, see you guys in there. Peace out. Good luck. Enjoy your weekend.